Recent data has shown a cooling U.S. economy, prompting many to believe the Fed is going to be cutting this year. So could tomorrow's June CPI report make the case even stronger for a cut sooner rather than later? Well, joining us now is Dana Peterson, chief economist at the Conference Board. Dana, it's great to have you on. I'm going to ask you that very question, especially as we're coming off of 2 days of Powell testimony on the Hill, where he did seem to imply that the path was set potentially for a September cut.
I'm not sure that's actually what he was saying. He's still saying that the Fed needs to feel comfortable that we're heading towards 2% inflation. So remember, going back to the first quarter, we saw a stalling out in that progress. We saw a little bit of improvement in the second quarter, but I'm not sure if tomorrow will definitely seal the deal for a September cut. We definitely need to see further deceleration in inflation, and also the fact that the labor market still continues to hold up, despite the fact that, yes, the broader economy is slowing as the Fed is impacting demand.
Over the past week or so, though, whether it's Powell or even some of the other officials from the Fed, there does seem to have been a little bit more emphasis on the fact that you do see this softening, this cooling in the labor market. So are you in the camp that September could happen depending on the data we get tomorrow and in the coming weeks, or no?
Not really. We still have our focus on November and December if we're going to see one or two cuts. I think the key thing is that the labor market has gone from raging to robust. We're still seeing outsized payroll gains. On average, in the second quarter, we saw a net gain or average gain of 177,000. That's really strong. And the unemployment rate at 4.1% is still very, very low. The key thing is we're not seeing hours come off, which would be a canary in the coal mine for a more serious contraction in the labor market. And wages are still elevated. Most people who want to work are working, and we're still hearing that corporations are holding on to their workers, and they're not looking to let people go right now.
Dana, what about rents, housing? How much does that matter?
That matters a lot. Indeed, the one element of services inflation, and again, most of the inflation we're seeing is from services, a huge element is housing and rents, those shelter costs. But past declines in rents and home prices are signaling further weakening in shelter costs. And that's going to be important for getting us back to 2%, especially because you have supply drivers and other elements that are working against the Fed's actions to cut interest rates.
So everybody seems to be focused, perhaps it's our fault a little bit, on when's the Fed going to cut. But even once the Fed maybe does cut for the first time, how often do you think the Fed cuts after that? Is it just going to be one and pause for a while? What kinds of numbers would it take for there to be a more discernible path?
Yes, it could very well be one and then a pause. We're seeing that among many other central banks, Canada, ECB, where they're going once and they're saying, well, let's wait and see. So that could be the Fed's tactic as well, especially towards the end of this year. There's almost always some kind of a budget impasse. And then certainly the debt ceiling comes due in January. Through extraordinary measures, maybe the X date is later in the year, but still in all, those things along with the path of inflation, how well GDP and the labor market are doing are all going to factor into how many times the Fed cuts. They may do one and done or do one and wait. We shall see.